The Feds just cut interest rates again, and we saw massive reactions in the markets. The stock markets hit all-time highs along with gold, and we saw downside on the US dollar. So in this video, I'm gonna break everything down so you guys could really understand what is actually going on, why those moves happen, and what to anticipate moving forward. So traders, hopefully you enjoyed this video. Please do me a favor, like, comment, and subscribe so that other traders like you could get access to this information. Other than that, right, I want to also talk about what's going on with the economy, because I feel like there's a lot of things that the Feds are doing that's just not adding up to what's currently going on in the economy, right? I feel like something bigger is about to happen, right? I feel like we're going to get some sort of a reason for quantitative easing to happen, right? So what I mean is like the global reset, right? The transfer of wealth. You guys know what I'm talking about. I feel like they're trying to force or have something like that happen. It's just that when they're saying that the economy is doing well, they can't just do quantitative easing for no reason. They have to have a reason in order to do it. So I'm assuming it's either going to be a banking problem. It's either going to be labor data is a lot worse than what we're expecting, right? Especially from what he's saying, I'm expecting it to be a lot worse, right? Because something has to happen in order for us to get to that next area of the cycle, right? In order for the Feds to start doing QE. But let's just break down what happened with this actual rate decision. So we could look right here. So what happened today, right? The Feds cut rates by 25 basis points. So this was already expected. Okay, so markets already priced in over 80 to 90% for a 25 basis point cut. And when it comes to the Federal Reserve, they don't like surprising the markets. Okay, so most likely that was already anticipated. There was a few banks out there, though, that anticipated a pause, but we didn't get that. All right, so they cut rates by 25. So now the range is from 3.50% to 3.75. So when you hear that range, like it's always a range. So right now we are at 3.50, but it's always a 25% range. All right. So just so you guys understand, this is the third rate cut that happened in a row. So that should make Donald Trump happy, right? No, right. He's always pissed. He's always mad at Jerome Powell. He's always pissed off at him. Right. So it doesn't matter. He wanted a 50, but we can see the vote split 9-3 vote split. Two members wanted a no cut, which was interesting. So this Federal Reserve now is the most divided it has ever been in a very, very long time. When I mean by divided, there's members are all over the place. You know, they all can't come with they just can't become very neutral when it comes to cutting rates or pausing. A few members want to cut, a few want to hike, right? So this is the first time that we actually got this. Why did they cut? Okay, it's because Jerome Powell signaled that the labor markets is showing downside risk, right? Job gains are slowing, right? The labor markets is cooling. So those were the comments that he did give us, which gave us the confidence, right? The markets had the confidence. And he also said in the meeting that one of the Q&As, which I thought was a good question from the reporters, right? Because they've been saying a whole lot of nonsense, right? It's just mind-blowing how the questions are. But they did say the reason for like their focus is not on inflation the way it used to be. The focus is on the labor markets. That is more a priority. And he's saying that inflation is still elevated, right? Which is a reason that we could expect them to give us that hawkish pause. But what also happened is that he is confirming that the labor markets is showing downside risk. And the fact that he is confirming that the labor markets is showing downside risk is one of the reasons why they cut interest rates. And that is the reason why we had that dovish reaction today also. Okay. So the labor markets has been easing. They're expecting it to ease more. So just like what I was saying in the intro, what if the labor markets is a lot worse than what they're telling us, right? Because they're afraid, like, because right now when we have weaker labor, weaker growth, like, and higher inflation, that's stagflation. But the feds don't want to throw that word around. They don't want to throw that wordplay around. But the reason why we had that dovish reaction today is because of what he said about the labor markets is easing and has more downside risk than what they thought before. He also confirmed today that there is not going to be a hike, right? They're not hiking interest rates. So those two comments was the main reason why we saw this overall dovish reaction. Okay. So now when we look at what he said about inflation has come down a lot, which we knew. Inflation was like at what, like 5, 6, probably without the numbers, inflation was like at 10%. So yeah, of course, inflation is coming down, but it's still not at their 2% target goal. Their range is from 2 to 2.5%. We're nowhere near that when it comes to inflation. He's expecting to get there by supposedly next year, but they're cutting interest rates. So I wonder how they expect inflation to still push lower, unless he thinks that the only reason we have higher inflation is because tariffs is the main focus. So what he thinks that the Supreme Court is going to end tariffs, then things go back to normal. It's a possibility, right? But it's kind of interesting that they're still saying inflation is still sticky and they're still cutting interest rates and giving us no possibility, right? So that's probably why I was a little cautious today in taking a trade, because when we go to the dot plot, right? Because you can see like at number 3, the dot plot. So for those that don't know, when it comes to the dot plot, it just shows every single Fed member the path of rates, where they're expecting rates to go by the end of that year. So each dot, right? So I can show you guys an example, right? So like each dot shows exactly what each Fed member expect they're voting for, where they think rates is going to be by the end of the year. And wherever the majority of the dots are, that's the number that we see of where they anticipate rates to go. Okay, so when it comes to the dot plot, there was no change. So the fact that there was just no change, only one rate cut for 2026, I'm a little shocked to see that type of dovish reaction, okay? But there are going to be things that we could pay attention to, right, in order for us to expect more rate cuts or not in the future, and I'm going to explain that afterwards. So market reactions, just to let you guys see the charts. We saw a dollar at the bottom right. You could just see how aggressive dollar started pushing lower because of those comments of what I was saying. We could look at the top right. You could see how gold hit these highs as well, and show you guys equities. You can see like NASDAQ pushed higher, got a recovery so far right now, but US 30 also hit higher. So this is a classic dovish reaction, okay? So the fact that the markets is pricing in that dovish reaction, I feel like that was just the algorithm spikes. But I don't trust the direction long term. I think we need more proof in order for that to hold. Because like I was saying, the only reason why I think today these reactions happened was because he confirmed that there was no rate hikes. And I feel like the moves that we got was just algorithm spikes, because those algorithms get those keywords, no rate hikes, that's a clear reason to buy the stock market, right? So I feel like that was the reason why we got that, okay? Pretty much what Jerome Powell said, he is stressed at the Feds. He pretty much saying like data dependent, right? So he never really changed that narrative. Data dependency, right? So that was the main thing. This is why I expected more of a hawkish pause. But he also said no, the rate hikes is not a base case. So I felt like once this headline came out, that's when we got those reactions in the markets, okay? So he admitted that the labor market risks are to the downside. Jobs are softening. Is the markets kind of pricing in the fact that they're probably thinking like me, there's probably more happening behind the scenes than what we expect, because we got NFP coming up in the 16th of this month. What if those NFP numbers are extremely bad, right? So I wonder if there's more things happening behind the scenes, right? And then also you can see inflation. He talked about inflation it's still higher. It's still sticky. Inflation is still a challenge. So that alone, to me, right, I feel like the bigger picture, we should see more of a hawkish pause reaction where I would not be surprised if we see dollar push higher, equities somewhat give a recovery, because I feel like the bigger picture supports rate cuts, supports a hawkish pause, because we didn't get the confirms that next year we should be looking for additional rate cuts. Okay, so what we're going to focus on moving forward is labor data. Like I said, it's going to be on the 16th. If the labor data is a complete miss, we're going to most likely the markets is going to price in those rate cuts anyway. So we're going to see next year, when you look at the CME report, those next January, March, we're going to see that the possibilities of rate cuts is probably going to increase. So the labor markets next for this month is going to be extremely important. Inflation data, extremely important, because now we're heading into next year after all of this nonsense that we got with the government shutdown. More economic data could be released normally. Things could start flowing back a little more neutral and just better. All right. Like me, I was in AUD USD buys for like 2 weeks, man. And I closed because I was expecting dollar strength, but it kind of fooled me. But let's talk about gold, right? Because just something to focus on. We can focus on gold whenever you guys watch the video, right? Because I know my private group is going to watch this video. Just to give you guys a little insight, if you guys are interested in the private group, link is in the bio. Okay, guys, link is in the bio. And for those that have been pretty much following my journey, just to give you guys an update on the actual course, right? This is a full macro fundamentals course on understanding how the economy evolves, right? When it comes to the debt cycles and all of the pretty much the cycles that runs the economy, what central banks and hedge funds pay attention to be priced in the markets 3 to 6 months ahead, right? Because as retail traders, we get in when it's too late. Right? The moves already happened. Now people is looking for dollar sells, which is crazy. They knew that dollar was going to push lower the beginning of the year. That's why if you look at the market since January, right, what direction the dollar went, what direction equities went. Then in April was the reversals, right? Because what happened was tariffs messed up the cycle, right? Because that was a risk-off market. But when tariffs went behind the picture, markets started reacting to the possibility of rate cuts. So in this course, I break everything down. You got 10 chapters in here, 12 chapters in here, and also when you join a private group, it's all included in the private group membership when you become a member. You see it's like 5 hours of fundamentals and technicals. You get everything that you want regarding central banks, into market analysis, et cetera, et cetera. And plus it's beginner friendly as well. I got videos for beginners as well. So if you guys are interested, just press the link in the bio or just message me on Instagram. But looking at gold, right? Because we got this reaction so far by probably like around 9 p.m. Eastern, right? Just focus on this range. If we start seeing price breaking above 42.45, we start breaking above that resistance, then you could take advantage of the continuations of gold, right, throughout the session. But you want to see if the dollar and the yields do push lower, because if we get that reaction, that would be a great technical trade moving forward. But what I want to see, I do want to see recoveries, but it's a possibility that we might not get it. So if gold does hold below 42.20, we start breaking below that support, you could take advantage of that downside testing this area of support. But it depends if the markets recover as a whole. So you want to see if we get stronger dollar, stronger yields, and then if the stock markets could start recovering, then see if gold actually pushes lower. What can make gold push higher is the tariff situation. The geopolitical tensions between the U.S. and Venezuela. If that continues, right? If boots are on the ground, that would probably cause gold to push higher. All right. Let me check oil, because I know that they got an oil tanker. So usually when it's stuff like that causes oil prices to rise. So if there's any attacks on like Venezuela oil facilities, that could also spike oil higher too, just to give you guys that understanding so you guys don't forget. All right, guys. So that was pretty much a wrap up. I'll just give you guys a little extra too. We could talk about the Bank of Canada's rate decision today as well, because what happened with the Bank of Canada, they held interest rates at 2.25%. Okay. So the reason why they held interest rates is because we've been seeing strong growth lately, higher inflation coming in from the Bank of Canada lately. So this is what happens when you start tracking data and those data points shifted, because before, Bank of Canada's economic data, labor, growth, inflation was dropping. So the Bank of Canada was cutting interest rates. But lately, for the past 2 months, we've been seeing a shift, right? We've been seeing that Canada's labor market, you can see here, they added 181,000 jobs from September to November. That's a big boost, right? We can see that unemployment fell. So good unemployment. We also saw that they're not very comfortable the way inflation is, right? So core inflation, they're not comfortable yet. Inflation has been pushing higher. So this is what caused the Bank of Canada to pause interest rates, because they're not comfortable yet. They don't want to keep cutting interest rates when they're seeing that growth is performing well. Inflation is still at those high levels, right? So we're going to have to continuously track what's going on, which is cool. This is probably why USD CAD was like a really good trade. We probably saw USD CAD push lower aggressively, because you have two central banks giving you both divergence, right? One central bank was dovish, the other central bank was hawkish. So this is why this is a good scenario moving forward. But yeah, that's pretty much it, just to help you guys understand what happened. But private group members, just go to the central bank watch and go here. But moving forward for tomorrow, because we got, this is over with. We got the SMB rate decision. I know none of you guys trade that, but we got jobless claims that's coming up at 8:30. And then on Friday, we're going to trade together live for the UK GDP data. Finally, some UK data that's going to come out. But hopefully this is helpful, guys. Moving forward, right, looking at gold, try to see if you can get some good price action pushing higher. When it comes to dollar now, because we have an impulse already, right, because we already got this big downside move. So we have to wait for the next step, right? Either we're going to get a pullback or we're going to see consolidation, right? And then right after that second stage, that's when we're going to see the actual move. Are we going to see dollar pushing higher, or are we going to see dollar pushing lower? All right, so it's just going to take time. Focus on economic data. Just be cautious, guys, all right? So good job for you guys that took advantage of it, that joined the live call. Rewatch the live call also, so you can see how I prep for it, give you scenarios in both direction, and you could apply that moving forward, because it's just really good to just get this knowledge. But all right, guys, hopefully this is helpful. Again, give me a like, subscribe. Also share this with another trader as well. If you don't know, follow me on Instagram if you guys have any questions. But let me know what you guys think in the comments, man. Do you feel like there's something going to happen in the U.S. economy? Because I feel like they're holding a lot of information back from us.